What's up, y'all? Kaizen here. Welcome back to the channel. And in this video, I'm going to be sharing with you my exact strategies on what I've been using the past combines and evals to get to the funded XFA phase, right? So, um, the only reason I'm sharing this with you guys is because obviously to give you some value, but a lot of people overcomplicate trading and make it harder than what it is when it's literally just you watching price action and kind of predicting where the market will go, because nobody's going to be 100% right. And if they are 100% right, they are lying to you. Most YouTube channels are going to overcomplicate trading, but if you look at the people who are the most successful with trading, their strategy is very simple, no overcomplicated mess at all. And even when I was more consistent with payouts from Top Step or whatever, my strategy was simple, and it wasn't until I started changing things and thought I needed to be quote unquote get smarter or better and start learning these other strategies that it threw my trading off. And once I returned back to trading simply, it made it easier. So anyways, let's get started. Here are the indicators I use. People are going to hide them from you. I'm not. I really don't even use most of these anymore. I really only use the ICT high time frame candles so I can see where we are on the hourly, daily, 4 hour, and weekly. And that's going to come into a factor in a sense. It's going to come into play later. I'll sometimes use the volume indicator, but I don't really use it. I think out of all these, I kind of use the 9 EMA and 21 EMA to see if price is above it or below it, because sometimes, or a lot of times, when price gets to these EMAs, it'll bounce around trying to decide where it wants to go, right? Um, these other indicators are here when I first started trading, like the swing high, swing low kind of helped me map out the highs and lows of the market in case you're just getting new into trading. I'll go over those indicators in another time. But anyways, let's get straight to the strategy. My strategy is very simple. Let me drag it over here. Simple. I mark up key levels. Key levels, what are they? It can be support, resistance, supply, demand. Those are the main things I use. I don't use all this extra complicated stuff, like quote unquote like fair value gaps. I've used them in the past, but I just try to keep everything as simple as possible, right? So support, resistance, or key levels. For example, I'm on the 15 minute. I like to mark up on the hour and 4 hour. So if I go to move this out the way, the 1 hour, where has price bounced at the most? Because clearly we're trending up. Where's price bounced at the most? Well, here, 1, 2, 3. Prices came here 3 times and bounced. So that would be a key area, right? And then every now and then I'll kind of go within like the lower time frames and see where price is bouncing. So for example, it made a new high here. It came down, but once it came back up, you would expect it to sell off, but it actually broke through and it led to this huge move up, right? I try to keep this stuff simple. For example, this would be resistance up here, right? Why? Because price had a huge sell-off once it got up here. It sold off, came back up, it tried to push through, sold off until it got down to this level, and it kept selling off. Once it came up here, what did it do? Consolidate, consolidate, consolidate. I mean, it's still going up, but it's consolidating. Came up here again, sold off, but once we broke through, this huge move happened. And then look at where price is right now, consolidating around the same area from earlier. Now, I usually use lines for more precise areas, but I will use boxes like I am right now. But like I said, I mark it up on the 1 hour or the 4 hour simply because it's easier for your eyes to see. And you don't want to go to the 5 minute and kind of get caught in all the noise, because then you'll think this is an area or this is an area when price is bouncing at the huge areas. And price is going to react more to higher time frame spots on the chart or places on the chart. So that's number one. Number two, I'm looking for, sorry, let me get that back. Number two, I'm looking for market direction and confluence. So what does that mean? Market direction, very simple. Is it going up or down? If it's ranging or consolidating, I probably won't touch it. And if I do touch it, touch the chart or try to trade, I'm gonna trade at the highs and lows. So for example, where's that path chart? I mean path tool. It's one of these tools. Where is it? Did I already pass it up? I don't know where it went. Anyways, I'll just use trend line. So let's say, for example, um, we have. Oh, I already have it on my charts here. Let's say these are two key areas, right? Like I said, this is a up. Is we're clearly trending up, but I'm talking about for this specific instance, we are in a range or is consolidating, meaning it's not really going anywhere. So, why am I using Ray? I wish I could find this pad tool. Where's the pad tool? Can I search it up? I know it's somewhere in here. All right, y'all, I found it. So, anyways, like I said, this is trending up. Obviously, a downtrending market would be trending down. But let's say it's consolidating or ranging. What does that mean? It means all it's doing is jumping from these two areas. Now, eventually, it has to break out and choose a direction. But if it's ranging, it's literally just doing this, going bouncing back and forth, and eventually it's going to break out downward or upward to continue the trend. Now, I don't know what's going to happen, but eventually it does. I don't usually test or touch markets like that simply because it's unpredictable, and I try to keep trading as simple as possible. So I'm looking for market direction. Now, what is Confluence or whatever? It's essentially why I have this ICT high time frames candle, because I got tired of jumping from the 1 hour to 4 hour to the daily to the weekly to see what's going on, right? Confluence is basically I want to be trading alongside the higher time frames. So if I know we're trending up, okay, I'll use the example here. Lately, since last week, we've been going down slowly. Let's say this July 20. Why the heck? Okay, yeah. So since last week, we've been going down. So on the weekly, we've been coming down. On the daily, we've been coming down. On the 4 hour, we've been coming down. On the 1 hour, we've been coming down. So those are four higher time frames to where price is selling off. So where do you think I want to be? Unless I'm a reversal trader, where do you think I want to be? I want to be selling off with the way the market is going. And like I said, the higher time frames hold way more weight than the lower time frames. So if we're selling off on a weekly, most likely it's daily. We're selling off on a daily, the 4 hour, and the hourly. The other thing to understand is price is fractal. What's happening on the 5 minute is happening on the 15, 1 hour, 4 hour, daily. It's just different time frames. Obviously, each candle is 5 minutes. If I go to 15 minute, each candle is 15 minutes. But it's all happening. They're doing the same thing. Price isn't different on different time frames. It's the same thing. Now, why is it so important? As I said, I want to be trading alongside where where price is going on the higher time frames. I don't want to be trying to buy. If we're trending down on a weekly and a daily and a 4 hour, I don't want to be trying to buy. I just want to kind of wait for a retracement and then look for a sale, right? And that's where a lot of people get stuck at. They get stuck looking at the 5 minute or the 15 minute and thinking, okay, we're probably about to go up. We've been selling off for a while, not knowing that on the higher time frames we've been selling off and we're going to continue to sell off. Why? Because if you look at the chart, I go to 4 hour, look at the chart, we just made a new high. We broke this recent high, we broke this recent high, which was resistance areas, right? Came up here. So now we're kind of selling off, and we're probably going to find a spot where we for look for a, I don't want to say retracement, look for a change in market structure to where we start we have bullish movement, or people are buying again, basically, right? And then the last thing, I'm entering on the 5 minute or the 15 minute. This is like the easiest thing. All you're doing, like I said, if I break this down, let me go back because you can't see it. I'm marking up key levels, looking for market direction. in Confluence, I'm entering on a 5 minute or 15 minute. Now after this, now this is a very simple strategy, and this works for me and has been working for me for a while since I kind of changed some things and tweaked some things and got away from overcomplicating trading. So let's talk about like the hard part, like okay, actually entering. When are you looking to enter, Chris? Well, honestly, when I'm looking at the chart, let's say if I replay this, right? How do I? Damn it! I hate that they do this now. I don't know. It does. It really doesn't matter. Now my chart's all messed up. Let me get this out the way. Let me just get out of replay mode. It doesn't even matter. And why did that? Come on, I want to get rid of this. Okay, so let's say price comes down here, right? So just imagine this part from this white candle onward didn't exist, right? Prices came down here. Well, if I'm going by my rules, I should already have this key area marked up and be thinking, okay, it's approaching this key level. It can do two things. It can either break through and we have a huge sell off because we've had two bounces from here. We had one huge bounce and this one was like a small one, right? It could have a huge sell off. If it break through, we have a huge sell off, or it can reject and make this reject from this support area, right? And what I used to have a problem with was like entering in on market orders and just literally getting in as soon as it entered this area. Okay, I'm just buying. No, that's rookie stuff, right? I want to look for a change in market structure, right? So number one, like when I'm entering, I want to see once it gets to this area and the next candle starts, I want to see this candle start shooting up. Because if this candle starts shooting up aggressively, I know there's buyers in the market, right? Versus okay, if it's just it gets here and then it's just sitting here for the longest and not moving, I'm not looking to buy it because I don't feel like there's enough momentum to push up, right? So that's number one. I want to see momentum, like a lot of momentum push up. Number two, like I said, I want to see a change in market structure. I should probably write this down for you guys. So momentum. Let's just name this entry requirements. And the only reason I'm writing this down is because you probably won't get the same requirements every single time, because a lot of times, even though I'm seeing this, I've been trading so long, I'm kind of relying on my intuition as well. So, and that just comes with trading. So momentum. Number two, change in market structure. Or actually, let's just put market structure shift. People understand that more. And I'll get to number three in a second. So what is a market structure shift? That's essentially, I want to see this candle, like let's say I kind of get in later, or I didn't feel like there was enough momentum or whatever. I want to see this candle close above the most, somebody's calling me. I want to see this candle close above the, oh, golly. I knew they were about to call me. I want to see this blue candle or this bullish candle close above this most recent high point right here, or the most recent bearish candle wick. Why? Because I know for a fact if it can't get above this, like the most recent wick of a bearish candle, we're probably going to continue selling off, right? So I want to see a market structure shift. I want to see it close above this, right? Which in this case, this candle does. I want to see this. Got it? Even if I didn't get in on this entry, and let's say, I just don't trust it or whatever, we had another variation of this. I mean, not a variation, another variation of market structure shift with this, where this blue candle closed above this most recent high, right? Or some people call it high. I don't know. I don't get into all the nitty gritty or whatever. but this blue candle closed above this. So now I'm kind of looking, okay, we didn't took out the sellers in a sense. So now we should start to push up. And as you can see, sellers keep trying to sell off, but we're just constantly rejecting, and then we go up. Number three. So that's market structure. Number three is I want to see it price stay above 9 EMA, 21 EMA. Now, this one is pretty easy. Like I said, I don't really have all this stuff on my chart. I literally just have the ICT high time frame candles or whatever. But if I feel like price is kind of not really moving a lot, I'll put these on to see where price is. And even on this example, let's say, momentum didn't, this candle finished late, for example. Let's say this blue candle finished late and finished above this wick late. And I didn't feel like we had enough momentum, right? But we did have a market structure shift. So we did finish above it. And let's say, I'm still not sure because, we've been selling off for a little bit, right? Even though we're bullish on the hour, and my Confluence says we're bullish, right? The 9 EMA and 21 EMA is good for knowing where direction is going. So once I see this huge movement or this huge candle come in and we're above the 9 EMA and 21 EMA, this is giving me the indication of, okay, there's buyers in the market, and if I'm looking to buy, this is my opportunity to do so, right? Now, I know a lot of people are going to be like, okay, well, let me just go to trading and start an account and trade with the 9 and 21 EMA. And yeah, you can be good with it, but there's a lot of times where price is just consolidating around it. So you have to use overall price action and just kind of use indicators as just an extra confirmation, right? Because look what happens. We come up here, we push up, but where is price constantly consolidating around? The 9 EMA and 21 EMA. And it tries to push below, I think this is, the 21 EMA, and then we push back up. Right? So you want to keep, this is just what's been working for me, literally. I mark up key levels, look for market direction, Confluence on the higher time frames. I enter on the 5-minute or 15-minute. And then when I am entering, I'm looking for momentum, I'm looking for market structure shift, and I want price to stay above the 9 EMA and 21 EMA. That is it. Like, it's very simple. You don't need all this extra ICT, all this other stuff. I mean, and I'm not trashing anybody who trades the ICT way or whatever. It just gets too confusing for me personally, and I've always been a very simple person where simple gets it done. Sometimes it's easier just to keep things simple, right? And as another example for like the EMA, as you can see this, we already know this is an uptrending market, right? With the NASDAQ 100, right? But as you can see with the EMA, 921 EMA, look, price is constantly trying to stay above it, right? Even when it comes down, it's trying to stay above it because this is an uptrending market. Even when it comes down, it goes up and it hits that same area. This is why we have marking up key levels or support resistance. We had a huge sell-off, huge push-up. We broke structure, came back up, sold off, came back to that same key level, pushed up, came back down, same key level, pushed up, and now we're up again, right? So, this video wasn't supposed to be this long, but anyways, so let's reset the chart. Let's go to... Let me delete this now since y'all got that. Go to the 1 hour. So, for example, what would I be looking for? What, tomorrow? Yeah, it's July 6th. So what would I be looking for tomorrow as far as like, am I looking to buy or sell? Well, first off, I don't fucking know because the market does whatever it wants to do. But I'm kind of looking, even though we've been selling off on a weekly, the daily and the 4 hour, I'm looking to see what's going to happen around this area. If this holds, if this key level holds and pushes up, I'm probably going to look for probably a little scalp on the buy, Or if it pushes up, I'm kind of looking for a retracement to where it comes up about somewhere in this area, this mid area, comes up somewhere here and then sells off again. But then again, this is an uptrending market. But the only reason I'm making this analysis or whatever is because I want to trade with a higher time frame. I would look like an idiot trying to buy and we haven't held this area and pushed up. Right? So it's really about your intuition, and sometimes your intuition is right, sometimes your intuition is wrong. You only get that over trading for so long. But there's been plenty of times where I just get a feel for the market and it ends up going that way, right? Even if it's going against all my technical stuff, right? But anyways, that's it for the video. If this video gave you some value, click the link down in the description below where I talk about trading related stuff, self-transformation, discipline, and more or whatever. Eventually I'm going to be coming out showing exactly how I trade or whatever, like I just did today, but in more detail if you need more detailed stuff. But anyways, that's it for the video. See you guys next time. Peace.